numbers come in. It's once again surprised, this time on the positive side. It's coming at a reading of 5.9%. Takes us back to the question of how credible are these numbers, but we will get you the breakup in just a moment. What we have right now is the headline number, which has come in at 5.9 against our estimate of 2.1%. So that's a huge positive. Hopefully you should see some sort of reaction coming in from the stock markets as well, but the breakup is something we should be getting in the next few seconds. There you have it. The manufacturing sector actually grew 6.6% against a forecast that we had of 1.6% growth, and against the October number of a minus 6% growth. Other components of the IIP we don't have as yet, but what we are working with is manufacturing. We have mining as well, which has once again contracted, but this time by 4.4% against our expectation of 5.6%, and this is against also the October number of minus 7.2%. So slightly better showing in the mining sector. Electricity growth pretty much in line with what the market was expecting. It's coming at 14.6%, marginally higher than what the market was expecting, against 5.6% what we saw in October. So a very strong set of numbers. Mining, as expected, has once again turned in a negative reading. But manufacturing is the big surprise. Shubh, I'm going to ask you to react first to the manufacturing number and then to the overall set of the other components.
I would think, George, there are two things. One, the consumer durables number would have come in well above expectations of the market. And once again, I would think it would be the capital goods segment which may have sprung a surprise. Because if we look at the basic, which we were anticipating to come at close to 6%, capital goods, we were still expecting it in a contraction of about 10%. Intermediaries also, intermediate goods also in about a contraction mode of 1.9% or so. So these were our readings of, expectations. So quite clearly, my sense is capital goods space is probably something that has sprung a positive surprise, as well as the consumer durables. Because if you look at auto, they would come within the consumer durable space, and they would also come under the, some bit of it in equipment, transport equipment, in capital goods. So I would think that these are the two surprise elements, so to speak, in IP. Now, this only makes the predictability and the forecasting ability of IP even more difficult, because if you look at combine the proxy variables, be it non-food credit or be it export numbers, all these did not point to such a sharp, bounce back in the manufacturing activity. So my sense is, we do see some of the random items actually springing a surprise on us, which go well beyond the ambit of expectations.
All right, and as we speak, capital goods has come up. That's contracted just 4.6% against 25% in October. Suresh, if I could bring it to you, capital goods, how are you viewing that sector? Of course, this data isn't to be relied on completely, but how would you react to that reading?
See, at the moment, I think capital goods stocks have corrected quite a bit. In fact, we have a position on BHEL in our portfolio, where we think,